All right, so folks, you may not care about the Federal Reserve or interest rates, but you may want to buy a home. And what the Fed does could influence the bond market, which could influence mortgage rates. And guess what? We got new numbers on pending home sales for the month of June. Diana Olick with those.
Well, Brian, pending home sales in June dropped just less than 1% from May, and we're down 2.8% from June of last year. These counts are based on signed contracts for existing homes, so people out shopping in June, and that's when the average rate on the 30-year fix actually dipped slightly, although briefly. The home builders noted in recent earnings that this brought more buyers in June, but of course the builders are also able to buy down rates. Home sellers can't, and rates popped up again in July. Today we are at 6.77%, according to Mortgage News Daily. Now, sales were down despite a nearly 29% gain in active listings, that from Realtor.com. Some of that gain is because homes are just sitting and not selling. There was actually a pullback in new listings in June. Regionally, though, sales dropped everywhere except in the Northeast, which is kind of weird because home price growth has been strongest in the Northeast. And mortgage applications to buy a home, that's from this week, they dropped 6% from the previous week, down 5% over the past 4 weeks. Total mortgage demand, including refinances, is at the lowest level since May. Now, the Mortgage Bankers Association's economist said it was less about the rate and more about, as we keep saying, uncertainty in the economy and the job market. Brian, I'm sure you've heard that.
Yes, I'm sure I have heard it, and I will hear it more and more. Diana Olick, thank you very much.